We have a lot to talk about. There are some serious problems going on in China right now that affect the entire world economy. And on top of that, we have the stock market that just doesn't know what it wants to do. And then on top of that, we have a lot of big name finance people calling for a recession, one of which in today's video says a recession is almost 100% guaranteed going forward. So stick with me today. We have a lot to talk about. Like I said, there are some big problems going on in China right now that impact the entire world economy. So basically what you need to know is that China's lockdowns lately with their zero COVID policy has been just brutal, and there have been a ton of protests that is very rare to see in China. There's a lot of problems going on there, and it doesn't just affect China politically and economically, but it also impacts a lot of just the world economy for many reasons. One of the main ones being that China is the world's second largest economy, and there are also a lot of major US companies that are in China, like Apple, Tesla, and many more. Apple actually has some huge protests going on at one of their factories in China, and this is going to impact, I believe, 6 million Apple iPhones from being produced. So that's a big problem. Obviously, when there are problems in China, it has a giant ripple effect to the rest of the world. So basically, that is huge to keep in mind. Some of these big companies that have exposure to China, like Apple, Tesla, Nike, and others, should be watched going forward. Apple has been one of the stocks that has been moving the most off of this news, mainly because so far, they are the main company to be affected by these protests, but obviously this news can change day by day. But that's one of the main things to know related to China right now. But what's very interesting with all of this crazy news going on with China stocks themselves are actually holding up just fine, which is a little bit surprising. So you have companies like Alibaba, which is ticker symbol BABA, or PDD, which has been blasting up. Or even if you just want to keep it nice and simple, if you go to KWEB or FXI, both of these stocks are basically just a bunch of China stocks all in one, and they have been on the uptrend lately. So it's very interesting to see like all of this horrible news coming out of China, and we're actually seeing China stocks move up when basically no other stocks are uptrending right now in the market. So it's very interesting. Also, over the past couple of weeks, I have seen a ton of very bullish options activity on many different China stocks like KWEB, YMM, and Alibaba. So, you know, we have smart money betting for China, but at the same time, there's bad news happening. So I guess that goes with the saying, you know, buy when there's blood in the streets, literally. So crazy stuff going on there. And then in terms of like the U.S. economy and the U.S. market, it has just been like two and a half weeks of just complete chop and nothingness and just a lack of movement. Right now, the S&P 500 has just been in a point where it's not moving up or down. It's just literally doing nothing. And in these markets, it's very hard to trade. And the market really just doesn't know what it wants to do. And there are some key events coming up that will definitely move the market a lot going forward. So the main thing that we have is, of course, rates just stagnating, which is a good thing. We are finally starting to see some rates calm down a little bit, which is a good thing. That's a very good thing. That'll help mortgages and stuff like that a little bit, but rates are still pretty high. Basically, what we're seeing right now is we are trying to have the Federal Reserve balance between calming down inflation while not crashing the economy, because inflation has been way too high over the past year, and it's just like this level of inflation is unsustainable, and we cannot have these high levels of inflation for too long, or else we're going to have some serious problems. At the same time, the Federal Reserve doesn't want to, you know, completely crash the economy, because that would also be really bad. So the Federal Reserve is like in this major balancing act that is very hard to do, where they're trying to lower inflation without hurting the economy too much. A lot of people have differing opinions on how possible this is for the Federal Reserve to actually do, and there's a lot of differing opinions. Some say it's totally impossible, while others say it is possible, but it's going to be pretty hard. Check out this excerpt from CNBC where Jeremy Siegel talks about his opinion on the economy right now, given the Fed's current actions.
month of decline in the money supply, the biggest 7-month decline since World War II. I mean, this is a very restrictive policy that if they try to keep this restriction going through next year, a recession is virtually 100%. But I think they're going to pivot once they see the weakness in the data come through.
So as you can see from the video, the next couple years will not be sunshine and rainbows for the economy. But looking a little bit deeper into some of the data that we do have available, we can see the Case-Shiller Home Price Index just got updated today. And we can see basically home prices are falling. Surprise, surprise. When you have mortgage rates double, yeah, that's kind of what happens. But nonetheless, while home prices are falling, they are still up around 10.4% year over year. So they're still up, you know what I mean? But they're just up less, if that makes sense. But if we look even deeper, we can see we have some data from Redfin that basically shows data from the whole United States, basically. We can see that according to Redfin at least, home prices peaked around the end of May, and they have been falling ever since. And honestly, this is not a big surprise given that mortgage rates have popped up so much. At the same time, this isn't necessarily a bad thing either, because when you have home prices up 20% year over year, that is just unsustainable, and it's good to see home prices rise over time, but not that much. That's too much too quick. So now we're finally starting to see, a lot of assets and a lot of commodities, and of course a lot of stocks, fall. We've seen stocks fall for the past year now or over that, but we're even seeing like commodities and real estate and other key assets start to fall, which is not necessarily a good thing, but it's not a bad thing either, because we do need to see inflation calm down, or else that will be a very, very bad problem going forward. So for the rest of this week, there are a couple important things going forward, and honestly for the rest of the year. So basically, today is November 29th of 2022. For Wednesday, November 30th, we do have some GDP data coming out before open, and we also have Jerome Powell set to speak at 1:30 p.m. Eastern Time. Jerome Powell is one of the most powerful people in the world, and he's one of the most influential people I guess you could say, on the United States economy. So when he speaks, it's always very important. With that being said, he is not set to increase interest rates or anything like that. This is a completely different event, so definitely keep that in mind. But also, basically, while we're on the topic of Jerome Powell, we do have the Federal Reserve set to increase interest rates yet again this time by 50 basis points, not 75 basis points, but by 50 basis points, and that is set to happen on December 14th of 2022. Basically, right now, there's a 70% chance of a 50 basis point rate hike. So keep that in mind. Keep that on your schedule or your calendar, I guess you can say. And then also, while we're talking about the market and the economy overall, it is worth noting that according to Compound Advisors, that we have basically earnings falling across the whole market, basically. So the S&P 500, we are seeing earnings fall quite a bit. This is not a good thing. As costs increase and as, in some cases, revenue declines, we are seeing a lot of companies report lower earnings, and that's not a good thing at all. And another very important thing is, just like we were talking about the China protests, that will most likely impact a lot of companies, especially in China, but also in the United States, in a negative way. Think about the giant factory Tesla has in China, basically all of Nike's exposure to China, and don't even get me started on Apple and all the exposure they have. When you have protests or problems like that, it hurts production and it definitely increases costs. So that will probably hurt earnings for a lot of U.S. companies as well. So there's a lot of crazy things going on with the market right now. There's a lot of uncertainty. Problems in China definitely doesn't help. And of course, the U.S. economy has had stronger days, to say the least. But there's a lot of things working in the background, of course. We definitely need to see inflation get under control if we want to see the economy strong. So keep that in mind. There's a lot of things going on. So be prepared for volatility no matter what. Looking at the S&P 500, it's just been a complete chop zone. It's honestly over the past couple months. So honestly, it looks like this choppiness I don't want to say the choppiness will continue, but I feel like over the next couple months we will see a relatively stagnant market. But I do think in the short term we are going to see some really good moves, and there will be some good opportunities associated with that. So if you guys learned something from this video, make sure to subscribe and check out this video on the screen right here. It goes over some really key things you need to know, especially in this market, to keep your account nice and strong. Definitely check it out. It's pretty awesome.